high-speed trade. Oh, welcome back, WeMasterTrade family. It's me, Aidan here. So I'm beyond excited to be with you today for another incredible live session. Oh, whether you've been with us for a while or this is your first time joining, buckle up because we've got a jam-packed session full of insight strategies and the kind of tips that would take your trading game to a whole new level. So we've got traders tuning in from all over the world, and it's awesome to see that everyone coming together to share, learn and grow. So let's just keep that momentum going, because the next session is going to be the next level. We've got some special guests here who are here to share their stories and strategies that help them rise in the top of the game, so trust me, you don't want to miss a single word. Okay, so first up, I have the honors of introducing Scarlett, an absolute beast in the Forex market. Scarlett has been mastering Forex trading for over 2.5 years, and she's here to share some seriously valuable insights with all of you. So, Scarlett, how's it going?
Hi, Aidan. I'm feeling it's fantastic and thrilled to be here. It's always wonderful to engage with the WeMasterTrade community and discuss the successful approaches I recently approached. I'm eager to delve into some of the strategies I've been applying in the forex market.
So I love that energy, and I know the audience is bound to be all about your Forex journey. But before we get into that, let's not forget about our next guest, Alan. So Alan's been dominating the farm trading scenes, especially in the high stake world of crypto and stocks. So Alan, how's it going?
Hi Aidan, I'm equally excited to be here. This session always offers a topic conversation, and today I'm here to share some of the strategies that have been effective for me in fund trading. It's going to be an engaging session.
So that's what we love to do. So for everyone watching, make sure you've got your notepad ready because Scarlett and Alan are about to drop some serious knowledge bombs, and we'll be diving deep into their experiences, challenges, and the strategies that will help them thrive in the fast-paced world of
Certainly,
fund trading. Yeah.
Certainly, Aidan. I began forex trading about 2 years ago, and what captivated me initially was the market's vibrancy and perpetual activity. The forex market is exceptionally dynamic, and I was attracted to the concept that there is always potential for successful regardless of the circumstances. When I first discovered WeMasterTrade, it immediately resonated with me as the perfect match. The resources they provide, including sophisticated technical analysis and access to real-time data, truly impressed me. However, it was the community aspect that clinched it for me. WeMasterTrade places a strong emphasis on aiding trader success by offering essential tools and support to advance, regardless of your starting point.
Oh, that's fantastic, and it sounds like WeMasterTrade has really helped you evaluate your game. Now, Forex is known for its volatility, because sometimes it can make or break a trader. So how do you handle the ups and downs of the Forex market without letting the patches get to you?
Great question. Volatility can be challenging, but it's also where real opportunities are. The key is having a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tools help me to do that. Their real-time alerts and customizable risk parameters allow me to react quickly but with control. When the market moves fast, you have to stay calm, trust your strategy, and not let emotions take over. And for me, that's where WeMasterTrade filters really shine.
That's some seriously valuable insight. Managing risks and setting core under pressures is definitely key in Forex trading. Now Helen, let's switch gears to fund trading. So for nearly 2 years, specializing in long-term strategy. So that's what drew you to fund trading and how it differs from other forms of trading?
Absolutely, Aidan. Fund trading revolves around strategic long-term growth. It's not about seeking quick win, but constructing a portfolio that can steadily expand over time. What truly distinguishes fund trading is the need to consider both short-term and long-term perspectives. Careful risk management is crucial while simultaneously keep an eye out for emerging opportunities. WeMasterTrade real data and analyze the tool have been instrumental in achieving this balance. They enable me to make a well-informed decision that align with my long-term strategy, even when the market presents unexpected challenges.
So I love that. Fund trading definitely seems that it requires a lot of patience and foresight. So how do you stay focused on the bigger picture, especially when the market gets rocky?
Patience is paramount in fund trading. The market is relevant fluctuations, but short-term up and down shouldn't decay your long-term strategy. A crucial lesson I've learned is to maintain emotional detachment. Don't get overly excited when the things are going well, and don't panic when the market dips. We must trade risk management through asset me in staying disciplined even during volatility. Then set aside risk parameter and have a peace of mind knowing that I'm not overexposed even when the market behaves unpredictably.
So that sort of advice keeping your emotions in check is definitely a big part of being successful in trading. So you both have shared some serious jumps so far, but let's talk about the tools that will help you get to where you are today. So Scott, can you share one specific features in WeMasterTrade that's been a game changer for you, correct?
Definitely. A tool I absolutely rely on is the account insights feature. It offers up-to-the-minute data on how my account is performing, and I use this to observe patterns, evaluate my trades, and make better informed choices. Whether I'm pinpointing the best time to enter the market or discovering market trends, this tool gives me an edge. It has enabled me to spot opportunities that I might not have noticed otherwise.
So that sounds like a total game changer. I think that real time insight is crucial, especially when you need to make quick decisions. So Helen, how about you? It's been your go-to tool in fund trading?
For me, it's all about the risk management tool. They allow me to customize the amount of risk I'm willing to take on any trade. That has been key for me, especially in a volatile market like crypto. We must try how me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That's what keeps me grounded even when the market is going right.
Oh, so risk management is really important, especially in today's fast market. Whether you forex or fund trading, how do you apply so I hope that everyone's taking notes because Scott and Helen are dropping some serious pro level insight today. Okay, so we are kicking things up a notch, traders, because it's time to dive into one of the most powerful features here, and we master trade, the pattern comparison. So whether you feet wet or a seasoned pro looking to scout you're going to meet high, this segment is for you because I help to and take your trading from good to great. So to be clear, here at WeMasterTrade, we know there's no one size fits all in trading. Every trader is unique with different styles, risk tolerance, and strategy. So that's why we offer multiple customizable packages to make sure exactly where you are in your trading journey. Whether you're aiming for high routes and high rewards, or you prefer this steady, methodical approach, there's something here for you. And to break it all down, I've got the Arson, Scarlett, and Helen, two WeMasterTrade finalists, so they both work closely with these packages in here to give us the inside scoop on how to leverage your spawn to its full potential. So let's jump in. Scarlett, you've been with WeMasterTrade for a while now, and you've seen firsthand how these packages can evaluate a trader experience. So can you kick things up by walking us through how both new and experienced traders can benefit from the pack comparison, and why is it such a game-changing feature in a WeMasterTrade experience?
Absolutely, agent. I really enjoy discussing these packages because it's where traders can truly customize their experience. The package comparison feature simplifies the process for traders to understand precisely what they are getting. When you visit the website, there's a detailed comparative overview of each package that includes information like the initial balance, profit targets, daily loss limits, and more. All the essential details are presented in a straightforward, easy to navigate table. It's all structured to assist trader in selecting the best tool for their success. So let's talk about the standard package, one of the most popular options. This one is great for traders who got some experience and are ready to level up. Well, you start with an initial balance of up to $200,000, which gives you plenty of room to trade confidently and make strategic moves. The profit target is set at 6%, which is perfect for traders aiming for steady, sustainable growth, and the daily loss cap is 4%. So you got enough breathing room to ride out market swing without stretching too much. So it's an awesome balance between opportunity and security.
So that sounds like a perfect stepping stone for traders looking to level up without jumping in too deep or too quickly. A 200,000 balance and a solid 6% profit target give you a ton of flexibility to build momentum. So for those who are looking for something a bit more freeing, so let's talk about the 5-10-10 package. So Scholar is one of favorite for high reward traders who what made the 5-10-10 such a standout?
Well, the 5-10-10 package now we're taking big place. Like the standard package, you start with $200,000, but this package is for those traders who are willing to take on bigger risk for bigger rewards. The daily loss cap is 5%, giving you more flexibility in how you can handle the market. But here's the kicker: the profit target jumps to 10%. This is perfect for traders who have confidence in their strategies and are looking to make those major gains. It's all about having a higher tolerance for risk in exchange for bigger payouts.
So now that we're talking about 5% loss cap and a 10% profit target, well that's definitely for traders who aren't afraid to go big and swing for the fences. But what if someone's looking for something more relaxed, maybe wants something simpler without all the pressures of being specific for a target? So I heard about the 5-10-0 package. So can you break it down for us?
Okay, the 510 euro package is ideal for traders who want to straightforward, no nonsense approach. You start with a $100,000 balance, but here's the cool part: there is no profit target. You can trade freely without a strat of hitting specific percentage. It just you, the market, and your strategy. The daily loss cap stays at 5%, giving you some structure, but the beauty here is that it allows traders to focus on consistency without worrying about specific goal.
So that sounds like a dream for traders who just want to play without all the restrictions. Talk to trader, no pressure, just doing the market. Now, Alan, what about those traders who want a bit more control over the risk management, but still want to play in that high-stake arena? So what can you tell us about the 5-10-10 new PC package?
The 51010 novice pocket is perfect for traders who want more control over their trades. You still got the $200,000 starting balance and the 5% data loss cap, but the flexibility is the real selling point here. This pocket allows you to track and adjust your trading parameter to match your style and risk management represented. Whether you're reacting to market changes or want to experiment with different strategies, this pocket gives you the freedom to adapt without losing the staging net of risk management.
So flexibility and control in a volatile market, oh that's huge. I love how these packages are giving traders more ways to adapt and grow. Now that we covered a lot, but I've been hearing whispers about something really special, the custard packet. So Scarlett, tell us what made this one so exciting?
Okay, the custom package is where things get really exciting. This is for the trader who want a full control, full customization, and a massive starting balance. You get a jaw-dropping $400,000 initial balance. Yes, $400,000. But that's just the beginning. The real beauty is that you can customize everything. The loss limits, overall loss limits, and even your profit target. It's perfect for traders who know exactly what they're doing and want to have a trading experience that matches their exact needs. Is the ultimate in freedom and control.
So a 400,000 starting balance and the ability to customize your entire trading experience. Well, that's next level trading, and whether you are a risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take the trading to these stratospheres. Alright traders, so let's just quickly recap whether you're just starting with the standard package or going for bigger rewards with the 5-10-10 package, or ensuring full freedom with 5-10-0, taking full control with 5-10-10 new PC, or customizing everything with a custom package. WeMasterTrade has the perfect option for you. So the only question is, which one is calling your name? And head over to the packet comparison section on our website right now and check it out for yourself. We've got packages designed to fit our trading no matter where you are in your journey. Let us know in the chat which package speaks to you, and our team is ready to help you get started. The future of fun trading is in your hands, so let's make it happen. Alright traders, so this is where magic happens. So we have talked about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package that you choose. It is about understanding and sticking your roots. So the conditions that we set here at WeMasterTrade are designed to not only keep you safe, but also help you grow and take your strategy to the next level. Now, whether just getting started or you have been trading for years, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment. Because if you understand the rules, you can master the game. So first on the list, and arguably one of the most important, is the daily loss limit. So you've been through it all, the high and low. So can you kick things up by explaining everyone how the daily loss limit works and why it's so crucial for managing risk?
Absolutely, Aiden. The daily loss limit is one of the most essential operations any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There is a limit to how much you can lose in a single day of trading, and it's determined by the greater of two values: your account balance and your equity at the beginning of the day. Let me break down with an example so everyone understands it clearly. For the first example, let's say you got a balance of the $105,000, but due to some open trade, your equity, including floating profit and loss, is 107,000 at the start of the day. If you're working with a 4% daily loss limit, that means you can lose up to the 4,000. If your equity falls below 103,000, you don't trading for the day. For the next example, on the flip side, if your balance is 100,000 and your equity is 99,000, the same 4% loss limit, means your account could be liquidated if your equity dips below the 96,000. The point is, the daily loss limit is there to make sure a bad day doesn't whip you out completely. It's about protecting your account and giving you a chance to regroup and come back stronger the next day.
So it's like an insurance policy for your trading day. You hit that limit and boom, before things get out of hand. But what happens if a trader accidentally crosses that line? Can they keep trading?
Great question. I don't know. If you breach the daily loss limit, your account is automatically liquidated, or your open positions will be closed and you won't be able to trade again, or unless you buy a new trading package, Here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses. So, but here a word of caution. Market fluctuations can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
So it's a hot start, definitely something traders should keep an eye on to avoid. And now that we understand what the day lots limit is and what happens when it hits, the next question is how to avoid hitting that limit in the first place. So how long have you been in the trading trend just for years? Can you share some practical strategies that traders can use to stay within the day lots limit or is?
You got it, Aiden. Staying with the daily loss limit is all about being disciplined and following a solid risk management plan. Here are the few key strategies that have worked wonderful for me and colored all the trader. The first, and I can stress this enough, always use a stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you are up the trade for the thing get out of hand. Think of it as your safety net.
Well, it takes another gold as in a mountain grey way. It says to stop you before you go off the cliff.
Exactly, and is that extra layer of protection. Now, the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single day trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you still fall from hitting your daily loss limit, and you can keep trading without any major setbacks.
So it's building all the funds. You don't got everything in one player, you spread out of it, and all that next time. But what about those moments when traders feel tempted to chase after the losses, trying to get it all back in one trade?
Oh, that's a big one, Aiden. Chasing losses is one of the biggest mistakes traders make, especially new ones. Don't chase losses. If you're having a tough day, take a step back. The market will always be there tomorrow, but if you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
Well, so true. They find to spring when you already wanted. It's more likely to make a mistake. Now, Helen, these strategies sound smart, but how do traders stay mentally strong when things aren't going their way? And what keeps them from falling into that emotional trap of chasing losses?
It's all about mindset, Aiden. Trading is just as a number game. You got to stay calm and focused. One just is to always have a trading plan before you even lay a trade. That's why when the thing gets tough, you stick to the plan and avoid making impulsive move. And if you find yourself getting emotional, just stop. Take a break, step away from screen and reset your mindset.
So I think Helen and Scott for those incredible tips on managing daily loss. And now let's shift our focus to another critical element of risk management, the maximum loss limit. So the term is like you're wanting to take out, ensuring that you don't deplete your account over time. Unlike the daily loss limit, which is at the end of each day, the maximum loss limit is cumulative. So when you reach it, your account will be locked and your trades will be closed. To dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, and why is it essential for traders at every level, whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy. This limit ensures that you don't go beyond a point of no return. So to dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, and why it's essential for traders at every level. Whether you are a new trader looking to minimize risk or an experienced trader scaling your strategy, this limit ensures that you don't go beyond a point of no return. So Scott, I know that you've got some great insights into the mechanics of the maximum loss limit. So could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategy?
Of course, Aiden, the maximum loss limit is a vital rule that's often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across a life of your trading account. So let's break it down. The maximum loss limit ensures your account equity never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed when your equity falls to $47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increased to $52,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It's designed not only to protect your account but also encourage disciplined trading by setting boundaries. The goal is to ensure that you don't dig yourself into a hole that's too deep to recover from. So here are a few specific examples. With the case number 1, let's say your account balance starts at $50,000, but your equity drops to $49,000 due to some market losses. You're allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. And with the case number 2, now if you're doing well and your equity rises to $51,000, you got some extra cushions. At this point, you're allowed to lose up to $4,000 before your account hits that same $47,000 limit. So to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed positions and factoring in any open positions that are still running. Your trading dashboard will show two key metrics. The first one will be the max permitted loss, which means how much you're allowed to lose overall, and the second is the remaining loss, which means the loss left before your account is closed. So what happens if you hit that limit? Well, unfortunately, if your equity hits that maximum loss limit, the system will automatically close your account for the day. All your open positions will be liquidated whether you're profitable or not. And if you'll be unable to trade for the rest of the day. To resume trading, you would need to purchase a new trading package.
So thanks, Carla. That definitely helps clarify the nuts and bolts of the maximum loss limit. So it's kind of like a safety buffer, isn't it? It's to keep you from spiraling out of control, especially when the market gets volatile. Now I imagine this proves perhaps different traders in different ways, whether you are a cautious trader who keep their risk low or a more aggressive trader trying to maximize profit. This limit is one of those things you can't afford to ignore. So let's bring in Scarlett. It's mentioned there. So what do you think are the most common mistakes traders make when it comes to managing their maximum loss limit? And more importantly, what strategy that trader can implement to ensure they never get so close to it?
Great question, Adam. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit could be costly. In fact, it's one of those things can sneak up on traders who aren't paying attention to the long-term picture. And I say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay well within the maximum loss limit. The first will be set stop loss orders on every trade. This is your first line of defense. Setting a stop loss means you're deciding in advance how much you're willing to lose on a particular trade. The system will automatically post your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're willing to lose about $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
So I love that it's like putting a safety belt on each trade once you look and that stop loss it out of your hands.
Exactly, and it's all about discipline. And the second one will be manage your position sizing. This is a big one. Often traders, especially newer ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. The good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should always risk about $500 to $1,000 per trade. This gives your potential losses manageable and well within your limits.
That makes total sense. So you're not putting all of your eggs in one basket, and it gives you more room to free throw.
Exactly, it's all about spreading the risk so you don't take too big of a hit on any one trade. The next one would be monitor your account equity regularly. This may sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to catch up in the market's highs and lows, but you should always be aware of how close you are to your maximum loss limit. Your dashboard makes it easier to check your remaining loss, so use it. If you see that you're getting close to the limit, it's time to take a step back and reevaluate your strategy.
In terms of watching a video gauge, you don't want to be dwelling on things without naming it.
Exactly, and never want to get stuck on the side of the road. The next strategy is create and stick to a trading plan. Having a well thought out trading plan is one of the most powerful tools in a trader analyzer. This plan should outline not only your profit goal but also your risk management rule. For example, if you have a few losing trades in a row, doesn't your plan tell you to take a breath, reset, or change your strategy? The idea is to have a reset series of rules so you don't make impulsive decisions in the heat of the moment.
So it's like having a roadmap where you know where you're going and you have the contingency plans when things don't go as expected.
Exactly, the market can be unpredictable, but a solid plan keeps you grounded. The next one is regularly review and adjust your strategy. Even the best-laid plan needs to be reviewed and tweaked from time to time. If you find you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop losses or reduce your trade size. The key is to stay flexible and adapt to changing market conditions while always keeping your risk in check.
So that's great advice, Alan. It's all about things, constant improvement. So you can't just set and forget. You've got to be ready to adjust based on your results and the market.
Absolutely, trading is dynamic and your strategy should be too.
Thank you, Helen and Scott, for such a fantastic breakdown of the maximum loss limits. And next up, we are going to enter a short break, and after that, we're going to continue exploring our trading rules and the promotion plans that are currently running.
Trade. 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 Trade.
Okay, so welcome back everybody. This leads us perfectly into our next key topic, the profit consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measures and maintain consistency in your profit. So now to give us a clear picture of how the profit consistency rule works and why it's important. So let's turn to Scarlett. So Scarlett, can you break down the rule for us? How is it calculated and why is it important for traders to focus on the consistency rather than just aiming for big ones?
Across agent, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 good days, it's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of all your profits and losses over the given period, usually a month or a quarter. You then express that results as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over a month your total profits and losses add up to $410. In that case, your profit consistency ratio would be about 48.7%. This ratio shows how much your performance comes from one standout day. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all your trading days. So why is this important? A low profit consistency ratio indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on those days when the market isn't giving you a big win. This kind of consistency is the hallmark of a successful long-term trader.
So that's a great explanation, Scarlett. So just to clarify, lower ratio means that you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, and then when you're too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you're not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and your trading is more predictable and stable over time.
So this is an incredibly insightful and it seems like it's a credible metric for any trader who's serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they're followed by big losses or long periods of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, so let's dig into some practical strategies to help traders maintain a low ratio, ideally under 20%. So Harlan, I know you've got some great tips. So can you work us through some techniques that traders can use to stay consistent and ensure their ratio stays in check?
Actually, Aiden, the profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rapid wins. One of the most effective strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investment across different markets, asset classes, or even trading strategy. If you only trade one market, say a forex or stock, you are being too reliant on that market performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So that makes a lot of sense. So if I'm really trading in, let's say, the US stock market, I bet we could really hit my profit consistency high. But by adding trades in, for example, commodities or forex, I could balance them out that way.
Exactly, Aiden. It's all about balance. When one market isn't performing well, another market may be doing better. This way, your overall performance stays smoother and you're not relying on just one or two trades to pull your through. Next up is position sizing. One of the biggest mistakes traders make is over leveraging, taking on positions that are too large related to their account balance. For example, if you have a $10,000 account, putting the $5,000 into the single trade is risky. Because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position size more and manageable, say no more than 1 to 2% of your account balance per trade. This reduces your risk and helps ensure that losses don't overwhelm your profit.
So you're not just talking about taking the right trades, but also making sure you're not putting too much of your capital at risk on any single trade. So smaller, more controlled trades lead to scatter your research, right?
Exactly, by managing position sizing, you prevent any single trade from having too much impact on your overall performance. This is about control and discipline. Another crucial element is having a well-defined trading plan. Without plan, it's easy to get caught up in the emotion of trading, whether that's the excitement of the potential win or the panic of a shift and loss. A solid plan outlines exactly when you will enter a trade, your asset, and how much you're willing to take. Have these rules in place, keeping your brothers and help ensure that your trading decisions are consistent, which in turn helps keep your profit consistency ratio in check.
So that's a really good point. A lot of traders, especially new ones, partly jump into trades without a solid plan and making emotional decisions, right?
Absolutely, Aiden. It's so easy to get emotional in the heat of the moment. But if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. This brings us to a stop loss order. A stop loss is an automatic asset that you set up to close a trade if it's moved against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss order, you can avoid those catastrophic losses that can throw up your profit consistency.
So I like the idea that you stop loss orders. Is there like a way to take emotions out of the decision-making process?
Exactly, it's like setting up a safety net. Once your stop loss is in place, you don't have to worry about watching the soft stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. So another important strategy is to regularly review your performance. Just because you set up a solid plan and strategies doesn't mean you should put everything on autopilot. It's crucial to check on your trend. What's working? Make adjustment as needed. You might find that certain markets or strategies are delivering more consistently than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So take performing maintenance on your trading strategy. Always looking for ways to optimize and improve.
Exactly, just like a car needs regular tune-up, your trading plan does too. Continuous improvement is key to keeping your profit steady. Finally, and it is a big one you should avoid. Whether it's fear after a loss or overconfidence after a win, emotions can lead to a poor decision making. If you stick to your strategy and avoid chasing losses or getting overly excited after the good day, you'll see much more consistent results.
So that's such an important point, staying calm and disciplined. It exerts out though, right?
It definitely takes practice, but staying level-headed is crucial for long-term success. If you can control your emotions and stick to your plan, you'll be far more likely to maintain consistency profit.
Alright traders, so next up we are going to dive into another crucial aspect of effective trading, the shift consistency rule. So this rule is key to maintaining both stability and latent profitability in your trading account. So Scott, I know you've got a great way of explaining it, so can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Adam. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. So this is really important because it prevents loss winning in your equity and helps mitigate the risk of significant losses due to sudden market movements or unexpected events. So let's let's break it down a little more. The maximum risk per trade idea, which means you shouldn't risk no more than 2% of your initial account on any single trade idea. This includes any floating losses, so you need to factor in all potential exposure. Next up will be the trade idea definition. Multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite direction are treated as separate ideas. So, for example, if you open several positions on gold buy, they will count as one trade idea, and the combined risk must remain under 2%. But if you have a gold buy and a GBP/TBY sell, they are treated as two separate ideas, each with their own 2% risk limit. Following these rules smooths out your equity curve, encourages disciplined trading, and most importantly, reduces the chances of massive losses.
So thanks, Scholar. That's definitely a helpful overview. And now let me throw this back to Orion for a second. So triggers that have many of you. How do we prevent triggers to stick to the risk uncertainty rule? And how does it seem to help those risk limits in place? And does it ever get in the way of your trading strategy?
Absolutely, Adam. The main points to remember about the risk consistency rule are the risk per trade idea. Stick to risk and no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensures you don't risk too much on any single trade. And the single trade idea, if you're opening multiple trades on the same assets and in the same direction, they count as one trade idea, so your combined risk must stay within that 2%. And the separate ideas, trades on the same assets or in the different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? It stabilizes your equity curves by preventing huge swing in your account balance, and it promotes discipline by encouraging traders to think more carefully about their risk, and the most importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to this rule helps you keep your trading account safer and support long-term success.
So, great, Scholar. So I know some of you might be wondering how to actually stick to this rule. So let's shift gears and get into some practical strategies for making it easier to follow. So how can you share your thoughts on how traders can stay disciplined and avoid breaking the risk uncertainty rule?
Of course, Aiden, sticking to the reconsistency rule takes some planning or discipline, but it's totally doable with a right strategy in place. Here are a few key tips. The first one is define risk limit. First and foremost, clearly set your maximum risk per trade idea to stay within the 2% limit. Even your risk management tool or calculator to help with it, most platforms have a built-in tool that allows you to ultimate risk limit.
So that's a good point. Having an automation takes a lot of the pressures out by. No need to constantly double check. Your platform does the heavy lifting.
Exactly. This makes it so much easier to stick to your risk limit when the platform is handling the number for you. The next one is monitor position sizing. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you are open several positions on gold buy, make sure the combined risk of all those trades doesn't exceed 2%. This is a way the traders sometimes leave up. They open on multiple positions without realizing that combined they risk more than they intended.
So even though the trades are technically separate, if they're on the same assets, you've got to look at them as one entity, right?
Exactly. I treat them as one idea because they are exposed to the same market movement. The next one is separate trade idea. Speaking of different trades, it's equally important to trade on different assets or in opposite direction as the separate ideas. This way you can manage trade risk individually without exceeding the 2% rule on any single trade.
Right, so you could be running a gold buy and it cheaply wipes out at the same time without violating a rule, as long as you manage to reach for each one separately.
Exactly. Just make sure you can keeping an eye on risk for each idea individually. I recommend using risk management feature that many trading platforms offer, like automatic position sizing or stop loss order. These tools can help control your exposure and prevent you from overextending your risk.
And I imagine these will really help prevent those moments regular check-ins are crucial despite potential issues before they become bigger problems.
Exactly, Aiden. It's all about staying proactive.
Alright, I think that covers it. So let's make sure we're applying these risk management strategies and taking advantage of the new options available for account management. Okay, so thank you, Scott and Helen. So next, we are going to walk you through our streamlined payout process. So at WeMasterTrade, we believe in making it easy, possible for you to access your hard-earned profit. So we offer various options for receiving payouts, including bank transfer, PayPal, and cryptocurrencies like USDT, ensuring taxability and convenience.
Well, our payout process is both fast and secure. After you make a profit and meet the payout requirements, you can simply log into your account, request a payout, and follow the on-screen instructions. Our team will process your request promptly, and in most cases, you can expect to receive your funds within 24 hours. It's that simple. And if you ever run into any issues or have questions about your payout, our customer service team is always here to help. You can reach us via live chat, email, or through our support ticket system on the website. We are committed to ensuring a smooth and hassle-free experience for all our traders.
So transparency is a key part of our philosophy, and it's where we're always here to answer any question you might have about your account or the payout process. But feel free to ask in the comments or address your queries as we go. Okay, so next up we would like to introduce with you one of our very powerful tools, the financial instrument. It's a WeMasterTrade. So I hope that Alan can help us understand more about this.
Sure. Welcome to the symbol of the pay of WeMasterTrade. Here you can explore a comprehensive list of financial instruments available for trading, including cryptocurrency, forex, stock, metal, energy, and indices. On display, you will find detailed specifications for a trading symbol, including contract size, margin percentage, leverage option, and commission detail. It's important to note that due to the market fluctuation, some symbol may be not always available for trading.
So, at WeMasterTrade, our vision is to foster a dynamic community of elite professional traders, positioning WeMasterTrade.com as the go-to platform for anyone serious about advancing their career. So really just getting started with user experience under your belt, we are committed to providing opportunities and resources that help you succeed at every stage of your trading journey. So at WeMasterTrade, we understand that each trader's needs are different, and we're here to support you with the tools, insights, and personalized packages that cater to your specific trading goals. And if you really do take on your training to the next level, you definitely want to stick around to hear about the exciting offers we've got lined up. The new promotion plan begin variants that is specifically designed to help you get more out of the experience with WeMasterTrade and WeMasterTrade.com. So we're focused on creating more opportunities for growth, increased profitability, and long-term success. Let me know where you are on your trading journey. So, and for those who are looking for ways to keep more of their profits, well, today we have an exciting update that will help you increase your earnings without changing your trading style. It's all about boosting your profit split by simply choosing the right funding package, and Ellen will help break it down for you.
Alright, this new update is something that every trader should know about. When you put in the effort to grow your account, couldn't it be amazing to actually keep more of what you earn? Well, now this new provision good, that's exactly what's happening.
And absolutely, Helen. I know that one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. But now, with this bonus profit sharing feature, you can actually increase the percentage of profits you keep. It's a total game changer.
Alright, so let's just straight into the details to hear how you can boost your profit split and earn more. So when you engineer from instant funding package with packages over $175, you get an extra plus in bonus profit sharing, and for packages over $350, you get 3% bonus in profit sharing, and for over $500, you get 5% plus in profit sharing. So, Alan, can you help break this down in a real example?
Of course, let's take a look at the $500 funding package. Normally with instant funding, you start with the 50% profit share, meaning that for every 1,000 in profit you make, you get $500. But with the new promotion, when you choose the package over the $500, your profit share jump up to the 50% to 55%. That means instead of taking your whole $500 from that $1,000 profit, you now keep the one of $550. And while that might seem like a small change at first, think about how much that adds up over time, especially for the consistent trader. So inside, the bigger package, the bigger your profit share boost.
Exactly, Helen. And traders, here's why this is such a smart move. Let's say you're someone who trades consistently and make 5,000 in profits over time with a standard 50% profit share. You walk away with $500. But with a 55% push, you now keep $2,750. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You don't have to train your strategy or take unnecessary risks. All you need to do is select a higher funding package, and you instantly start earning more from the same trades.
So if you're wondering, why is it such a big deal for traders? So let's hear from Helen on this.
A great question. As a trader, our goal is always maximize return while minimizing risk. The best way to grow your account is to keeping reinvesting your profits, but that's only possible if you're getting a bigger share of what you earn. With a higher profit share, you can scale farther, compound your earnings, and have more capital to work with for your next trades. Think about it, if you're giving a larger percentage of your profits, you have more flexibility to diversify your trade, try new strategy, and even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, these more percentage increases add up to the thousands of extra dollars. So if you are someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's such an important point, Helen. And from a psychological perspective, knowing that you're earning more per trade can actually help to instead of overtrading or taking unnecessary risks to hit bigger profits. You can trade smarter because you're already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunity, and a stronger ecosystem for everyone.
So, alright, you've kind of from the expert. This point of profit sharing is your chance to increase earning without changing your trading style. All you need to do is choose a right funding package and you instantly boost your profit spread.
And guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is the easiest way to maximize your return. If you're serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
Alright traders, so let's talk about one of the hottest offers available right now, the WeMasterTrade burger event. So this isn't just a discount or a little pack, it's a game changer. So for traders, we can discard the accounts of 0 to extra card. So it's got like Kyle to break it down for us.
Absolutely, the BOGO event or buy one get one is one of our most generous promotions to date. Here's how it works. If you buy about $175 account or higher, you'll get a free $10,000 instant account. If you buy $347 $40 account or higher, you will get a free $25,000 instant account. And if you buy $650 account or higher, you'll get a free $50,000 instant account. So essentially, when you purchase an eligible instant funding package, you're doubling your trading assets without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try a different strategy. Maybe you want to split your trade between the cumulative and adversary setup. Or maybe you just want a safety net in case one of your account hits fall down. Either way, you now have a more capital, more flexibility, and more opportunity.
So I love that this is an open version and made to jump through hoops, right? The burger account is going to be issued after qualifying purchase. Is it right, Scarlett?
That's right. Once your purchase is confirmed, our system automatically issues your bonus account. No hidden styles, no waiting periods. It's quick and seamless and incredibly trader friendly.
And here the cool part, WeMasterTrade allow you to combine BOGO account up to the $200,000 in the total funded capital. That means if you're a serious trader looking to scale, you can expect this account to trade even larger.
So they're huge, but let's talk terms if there's a few rules to keep things fair and balanced, right?
Alright, so here what you need to know. Each BOGO account allows one payout. After you claim your first profit, that account is complete. The next one, only one active BOGO promotion per trader at a time. Once you complete your BOGO phase, you are eligible for a new one. And the last one, the BOGO account must adhere to the same trading rule as the standard instant funding account. That means the daily loss, maximum loss limit, and profit target still apply.
So how do you make the most of it? Well, you could use your main account for your dry and true strategy, and the BOGO account is experiment with something new. Try gold scaling, news breakout trading, or running an EA on one and manual trading on the other. You got options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a more rules-based approach on the other. This creates a controlled environment for skill development. It's ideal for the traders who are looking to become more consistent and test risk model under real-time funded conditions.
So to recap, with the BOGO event, you get an additional funding account for free instantly with the potential to scale all the way to 200,000. So you diversify, test, trade, smartest, and profits more. Why are WeMasterTrade covered this?
And if you just don't
we are going to enter the economic analysis of today's news calendar.
Okay, we're moving on to the news. The first will be about the China long prime rate decision at 8 a.m. Well, this morning, the People Bank of China (PBOC) released its monthly long prime rate, which is LPR updates. While 1-year long prime rate unchanged at 3% and 5-year long prime rate decreased slightly from 3.6% to 3.5%. So China holding 1-year rate steady signals no immediate monetary tightening or easing on neutral stance, likely aiming to balance growth support and inflation management. The 5-year LPR, closely tied to mortgage rates, has been trimmed by 10 basis points. This is a supportive move for the property market, which continues to struggle. It reflects Beijing's efforts to stimulate long-term credit growth and relieve pressures on the housing sectors. So for the market impact, the CNY pairs may see limited immediate reaction. Chinese equities could get a mild push due to increased credit accessibility. Commodities like copper and iron ore may react positively on stimulus hopes. The next will be about Australia RPA decision plus statement, a big day of AUD with multiple high-impact updates. The cash rate cut to 3.85% from 4.1%. RPA monetary policy statement and rate statement will be delivered. The RPA press conference held at 12:30 p.m. Well, the RPA has made a surprise rate cut, signaling a shift in its inflation outlook, while the market expected a whole decision to cut by 25 basis points stress. Inflation is cooling faster than expected. Growth concerns may be creeping in, possibly from weak retail sales and global slowdown signals. The RPA might be pivoting to a more dovish path after a long tightening cycle. Well, you should watch for forward guidance. Will this be the start of rate cutting cycle? In the language in the press conference, was this one-off or part of a trend? Well, about the market impact, AUD sold off immediately after the announcement. Risk assessed in Australia equities housing may get a temporary lift, and traders should watch for AUD USD, AUD GBY volatility during New York session follow through. And Helen will help me with the rest.
Okay, for the next event is Canada CPI inflation data. Canada wrapped the day with a full set of CPI data release. CPI reduced minus 0.1%, median CPI got 2.9%, and trend CPI and 2.8%. Inflation in Canada is cooling across multiple measures, especially in the short term. The monthly CPI decline showed weak consumer price pressure, possibly due to the lower fuel or food score. This gives the Bank of Canada (BOC) more room to pause or even cut rate as economic momentum slow. For the market impact, CAD weakened slightly after the release. Fell, reflecting lower inflation expectation. USD CAD may trend higher the short term. The what cutting equity and rate sensitive sector for the upside movement. After the trading insight, let's summarize the key takeaway from today. China, no surprise on the 1-year LPR, but for the 5-year cut show continued support for the housing sector, overall to neutral to middle dovish. The next one, the Australia, the RBA rate cuts is clear shift in tone. Expect more dovish lens width and higher AUD volatility in short term. The term is dovish. And the last one, the Canada, cooling inflation across all the poll measures may lead to the poll of cuts if the MEAC meeting turn in dovish. That's all about news for today.
Well, thank you, Scott and Helen, for such a fantastic breakdown of the economic analysis. Thank you all to our audience for joining us today. We hope this session has been informative and fair. You're as excited about the opportunities at WeMasterTrade as we are. So remember to like, subscribe, and share the LiveStream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events and look forward to seeing you again soon. Until next time, happy trading!